Hello. Someone give me a quick heads up. Make sure the whole chat can hear me. Yes, sir. Thank you, iPhone. Always a pleasure. Always a pleasure. Welcome to the Max Options Trading Beginner Course class number 3. What you're going to need for this course, a little bit of pen and paper, especially for today's support and resistance class. You're going to want to be taking some good notes. Make sure you guys have your phone, laptop, PC, tablet. Maybe you want to take notes on there. That's completely your prerogative. And some room for push-ups. So we already went over the introduction to Max Options Trading, the tools you'll need to be an options trader, how to set them up in the brokers. Yesterday, we had a great class on understanding candlesticks and how we're going to use those to introduction into technical analysis. Today, we have support and resistance, which is fantastic part of technical analysis. It's a must. And that'll bring us into Thursday and Friday, where we learn about the Greeks, IV, and then choosing the right contracts. And we will be off into a great weekend. For those of you that were early, have a little discussion with your classmates until the daily session begins, which is kind of funny because I actually muted everyone before you joined. So sorry about that. Find a nice quiet place, free of distractions. You're going to want to really pay attention to this one. This is a good one. So please be respectful at all times. Stay on mute. If you guys have any questions at all during this session, please at any time write them down. Wait till the end of class, and at the end of class, we will have a section in which you guys will be able to ask those questions. Please write them all down. Stay focused, stay on task. Some foul language may be used in this classroom, but this is an adult classroom, all right? No children allowed. If you do have children there, use headphones, be a responsible adult. Before we begin, make sure you guys are following us on our social media platforms, Max Options Trade on Twitter. If you tag us on Instagram on the big account at Max Options Trading, we will tag you right back for that clout that you've been looking for your whole life, you lonely person. Follow us on TikTok, Max Options Trading with 2 Gs. I love trolling. It's like my favorite thing to do is post funny, stupid shit. Well, I think it's funny. Gen Z probably hates me. Probably think, who's this fat guy with long hair? Looks like Fat Jesus. Fat Thor. What's Fat Thor doing on TikTok? YouTube's coming soon with all these beautiful videos, and follow us on Reddit for the latest detailed insights on the market. We get a quick sip of water. We're going to dive right into it, ladies and gentlemen. How's everyone's day, by the way? Did everyone have a great day? I hope you guys all had a great day. All right, a little bubble water down the throat, and we're going to move on. Support and resistance. Let's get it. So what the hell is support and resistance? Support is a price level where a downtrend can be expected to pause due to a concentration of demand or buying interest. Resistance is a price level, they're price levels, where an uptrend can be expected to pause due to a lack of supply or buying interest. So resistance is supply, support is demand. All right. So when you hear people say demand zones, they're talking about support. If you hear people say supply zones, they're talking about resistance. All right. Fancy schmancy, apple to apples. All right. It's all the same shit. As the price of our assets or securities drops, demand for the shares increase, thus forming the support lines. Meanwhile, resistance zones arise due to selling interest when prices have increased. All right, I want you to pay attention to this word down here. Support and resistance are zones, all right? They are zones. They are not one unique number on the underlying asset. The concepts of trading S&R are definitely 2 of the most highly discussed attributes of technical analysis. This is a part of your TA that we're building a fundamentally strong technical analysis toolkit for you guys. As you analyze, everyone hear that? As you analyze chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price from moving further in a certain direction. So at first, the explanation idea behind identifying these levels seems easy, but you're going to soon find out support and resistance comes in multiple forms, and the concept is a little bit more difficult to master than it first appears to the eye. All right. Support and resistance continue. The S&R of an identified level, regardless of how the S&R level was found, is deemed to be stronger Stronger the more times that the price has tested and failed to break above below that point. Let's read that again. All right, because this is a common myth, is that when S&R is tested multiple times, like this, if this is an S&R chart here, if it's doing this, that this barrier here of support is actually getting weaker. Au contraire, mon frere. Write this down, everyone. This is an important thing you're going to want to write down in your empty notebooks. So it should be half full by now. It's stronger the more times that it gets tested. All right. Many technical traders will use identified S&R levels as a stock to choose strategic entry points because these areas often represent the prices that are the most influenced by strong selling buying pressures. Of course, S&R traders are confident at these levels in the stock price, so the volume increases more than usual at these levels. This is the 5 types of S&R we're going to go over here during this class. We're going to go over the horizontal static barrier, which is just a fancy ass way to say a horizontal line. I think that's right, horizontal. Trend lines, round numbers, moving averages, and Fibonacci retracements. Which time frame is the best to draw out S&R? All right, so this is a very common question that people ask. So how do I draw out S&R? All right, well, as a rule of thumb, if you're using higher time frames, such as the daily or weekly one, focus on the past 12 months of data to identify potential swing highs and lows. So if you're doing swing trading, you should be doing at least a year of good, strong support and resistance data. Although traders can use many different time frames, the best approach is usually to work with these 3 when drawing out your S&R. So if you're doing intraday scalping, you could use the 3 to 5 minute chart. The middle of the is the 15-minute chart for day trading. And if you're swing trading, you could do the 4-hour and the daily chart. Write that down, everyone. All right. So the higher you go 4-hour and the daily, all the way down to the 3 to 5. If you're a scalp trader, you're going to want to use those levels for S&R. Everyone got that? Resistance. Certain price levels tend to prevent traders from pushing the price of a stock in a certain direction. So for example, that Booty was holding a position in stock until April, and that was expecting the value of the shares to increase. Booty notices that the price fails to get above that 100 mark several times over several months. Even though it has tested the 100 level and came close to moving, Booty should now recognize that price near 100 as a level resistance. So this top line right here, hold on. Okay, besides this little part here in the front, that's a beautiful straight line. This is the $100 mark. You can see that this is now a level of resistance. Resistance levels are also regarded as ceilings or tops because these price levels represent areas where upward momentum stops. Buyers say, okay, we're out. And then that level, it becomes a barrier. Support. Support is that of the opposite. Support levels are on the opposite side of the playing field. Support refers to prices on a chart that tend to act as a floor by preventing the price of a stock from being pushed downward. Here we go. Here we go. Okay, this one's going good. Oh, I should have fucking kept my mouth closed. That one was going real good. Support refers to a price of a chart that tends to act as a floor, preventing the price from being pushed downward. The ability to identify a level of support should be identified with buying opportunities because this is generally the area where buyers and market movers see value in the underlying and start to push in. So if Booty noticed the same stock could never drop below 50 here, over the course of a good strong timeline, he could see the test as a buying opportunity. Even though in this we see that it broke 50, but you could see that here, buying opportunity here, buying opportunity here, all the way through. Let's head over to our charting software and let's plot some horizontal static support and resistance. All right. So let's head on over to our trading view real quick. Oh, I should have loaded this shit prior to starting. Who knows? The internet in Italy, I got to tell you, it's not the best. It's not the best, ladies and gentlemen. I'm working slower than I'm used to working here. All right, so let's check out some horizontal static barriers. So I know on Tesla, I have a couple already. So this is all you do. You see here, Tesla? I have a good amount of them drawn out here because these are previous support and resistance. I don't have 12 months of data to work off of because you can see over the last 12 months, Tesla has ripped to new highs, high over high over high. But we do have some good price data to go off of in the short term here. Tesla was trading in this box as a resistance, and this box is a support from January to middle of February. So 6 weeks, it stayed in one box here. And then we could see it tested the level of 600 once, twice, 3 times, 4 times, 5 times, 6, 7, 8 times here. So we can say that 600 is a pretty strong barrier for Tesla. This is your horizontal barriers right here. You find the price level action that is continuously tested, where resistance can become new support and support can become resistance on downtrends. And that's what we're looking for when we talk about horizontal static barriers. If you come over to the left here and see this second, you have your arrow, your clicker, you go down to the second one, you hit the little arrow and you just hit horizontal line. That's it. You hit horizontal line and you're able to place that bad boy wherever you want. Find your support resistance levels. That's what you're looking for. I always do mine on the daily or the 4 hour. That's how I chart mine out. I'm a swing trader. But remember, you can go all the way down to that 3 or 5. Trend lines. Trend lines is the next form of S&R I want to go over. So the example shown for the previous S&R of a constant level of support. So those that level, like the 600 level on Tesla, that's a constant. It's gonna stay 600. It's gonna stay horizontal. All right. But when we talk about trend lines, the ceiling and floor is one of the most popular forms of S&R. But the price of the stock is usually trending. All right. So as a stock is trending like you saw in Tesla, you're going to see that the support and resistance levels can change over time. This is why trend lines are important when learning about S&R and identifying these trend lines. So uptrends, when we look at uptrends, when the market is in an uptrend or your underlying is in an uptrend, you'll see resistance levels are formed as the buyers slow and the demand isn't meeting the supply. As the stock begins to move back towards the uptrend line, this occurs for many reasons in the stock market. You could see these as tops. You could call them ceilings or just it's hitting resistance, whatever you want. But this is short term and when we're dealing with current uptrends. All right. As a trader, you need to pay very close attention to the price of a stock as it falls towards your support line, because this has been an area that has been preventing the price and the asset from moving substantially lower. So you can see when it tests here in this demand zone here, that it bounced nicely. Just a little miss here, but I would say that's a nice zone for it still. Test here and a fail, test here and a fail. So it's reasonable to say that over the next time it tries to test this uptrend line, that it's most likely going to bounce and buyers will step in. We'll see some buying pressure. You can confirm that with larger spikes of volume, and then you'll see the current uptrend to continue. All right. A trend line can provide support for stock for several days, months, or years. All right, or even years. A good example of this is Pfizer. You'll see has a $39 to $40 resistance going back 10 years. All right, take a look at how the uptrend maintained for such a significant time frame. So this is from the 3rd of January to the 15th of February. So what we have here is just under 6 weeks of current uptrend being held and not breaking. So this is just under 6 weeks. This is a strong period of uptrending here. Downtrending. Now let's take a look at the opposite. So if the market is downtrending, you're going to watch for a series of candlestick tops, also known as peaks. All right, these peaks here, you see these little guys here. When the price approaches the top of the trend line, most traders will watch for the stock to meet with sellers, more sellers than buyers, and they should consider entering a short position or exiting your longs, calls, whatever. Because at this peak here, or the top of the downtrend, this is an area that has broken to the downside several times, keeping the downtrend intact. So you'll notice here that the downtrend is being held with support here and being held with resistance here. So you should see these tops as opportunities to sell or close your positions or possibly enter shorts. All right, let's head on over to our charting software and see if we can find some trend lines for you guys. I have one. You guys are going to get lucky on this one because I got one on. So let's take a look at the S&P 500. The S&P 500 has been in this steady uptrend since last year's major sell-off due to COVID. All right. So if we look at the trend lines here, which I have beginning on 9 April 2020, you can see it broke out, tested, and then gapped right back down in. Broke out here, broke out, which was very bullish, but it fell right back in. And then you could see how it has just respected this trend line all the way through into where we're currently at, all-time high in SPY. And the trend line is just holding strong the entire time. So this is a perfect example right here. All of these guys that you're looking at would be a peak, would be a peak, would be a peak. All of this top. You could enter shorts on any one of these and taking them. Look at all those peaks there. That's why it's important to see these trend lines, because when they do break out of a trend line, if we go to NextEra Energy here, you'll see this one was also in a beautiful trend line. Look at this. All the way through. Let me go ahead and clear this up for you guys. You could see here that once it breaks down out of these trend lines, will usually lead to a much greater sell-off. This little double bottom playing out on NextEra Energy right now is pretty nice. But you could see that when the trend line does break, it usually leads to a greater sell-off. Conversely, if it breaks to the upside, it usually adds to significant buying. That's trend lines, all right? Very important. Let's talk about round numbers real quick. The only reason I added this dumb shit in here is because it's true. And I'm going to explain to you guys why it's true. All right, chat, here's a practical exercise. Somebody round 3696 to the nearest whole number for me. Let's bring it back to like 6th grade. Let's talk whole numbers here, chat. Who's got the right answer? Who can tell me the nearest whole number? There we go. John says 37. Ivan says 32. Okay, Ivan, 32. Hold on, I got you, buddy. Here we go, Ivan. There's always one in the group. Okay, anybody else? Come on. Come on. What else you guys got? $37. Okay, 37. All right, so 37 seems to be standing out. Yes, of course the answer is 37. You'd be surprised how many times I asked this one and people get it wrong. 37 is wrong. Ivan, I'm sorry. 32 is a great answer, but it's not correct. You must do 5 push-ups. So another common characteristic of support and resistance is that stock price may have a difficult time moving beyond round numbers, all right, such as $50 or $100 per share. Why is this? All right, because most inexperienced traders, like the lot of you, tend to buy or sell assets when the price is at a whole number, because you're more likely to feel feelings. 2021, people have feelings that a stock is fairly valued at such levels. Most target prices or stop orders set retail investors or large investment banks are placed at round price levels, because $50.06 just doesn't sound as appealing as $50. It's just human psychology, because so many orders are placed at the same level. So if a hedge fund's placing all their orders at $50, they say, okay, 50 is good, we're out. Many of those orders are placed at the same level. These round numbers tend to act as strong price barriers. Let's think about strike prices for a second as well. It's very uncommon that you see a strike price with a decimal and some 50 cents or 75. Normally they go by the dollar with small increments in between. But for the larger stocks, you only go by the dollar. Nice whole numbers, right? So if all the clients of an investment bank put in sell orders at the suggested target of $100, it's going to take an extreme number of purchases to absorb those sales, because these blocks are coming in by the millions and they're selling off at that $100 price, which is going to cause that stock to immediately trigger and bounce below 100 back down to 99, 98. So those sell orders stop. All right. It needs to start increasing demand. So a level of resistance would be created at 100. Head on over to your charting software and someone find a round number for me. Find a round number. Anyone. Could be 12, could be 15. I'm absolutely kidding. All right. If you just switched over to your trading software, go ahead and do 10 push-ups, because you're a dork and you're trying to find round numbers. All right. Everybody take a look at this guy right here. This little guy's got integrity. He's doing his push-ups. So you should be doing your push-ups. Have some integrity, drop and give 10 like this guy. See this? this is going to be a successful trader. If you're not doing push-ups right now, you have no integrity. So when your trade is 50% down, you're never going to be able to cut it. Let's talk about moving averages, exponential moving averages. Technical traders incorporate multiple indicators in locating support and resistance levels, such as moving averages. This helps finding short-term momentum, never truly realizing the ability these tools have for identifying S&R. So EMAs, there's EMAs and SMAs. I'm going to go over EMAs is what I use, but moving averages in general. I use exponential moving averages over the simple, but a moving average is just a constantly changing line that smooths out past price data based on the time frame specified for the moving average you choose. So a moving average could be 21 days out, 50 days out, or even 200 days out, which the 200, everyone write this down, the 200 moving average is the most respected moving average, the 200 on the daily, right? When you have stocks that hit the 200 on the daily, it's widely seen as a buying opportunity throughout. This allows traders to identify support and resistance levels in those time frames, all right? So notice how the price of the stock finds support when the moving average, when the stock is uptrending, and how it acts as resistance when the stock is downtrending. Traders can use moving averages in multiple ways. You just don't use them as support and resistance. All right. You can use them to anticipate moves when buyers step in and a price line crosses above a key moving average. So we're going to talk about the EMA crossover. So when you have a line going like this, with a line going like this, a line going like this, and then you have one doing this, that crossover could signify a greater sell-off in the near. Regardless of how these moving averages are used, it often creates live and flowing support and resistance levels. Technical price action traders will experiment with different time periods. You're a swing trader, day trader, whatever. You experiment with it. You find out what works best for you and these moving averages so that they can find one that works best and find the specific trends that you like and that what you're looking for as a trader. All right, now let's head on over to our trading software, and I'm going to show you guys what I use. So let's find a clean chart for you guys. Not that clean. Nope, not that clean. Fuck it. This is a good one anyway. So let's look at DocuSign on the daily. All right. So let me show you guys and explain to you guys what I'm looking at here. So my green EMA here is my 200 moving average. My light blue is my 100 day. My yellowish orange is my 50. My blue is my 21. And my purple is my 9. All right. So I use 5 of them. I have my own custom script on TradingView that when they cross over, they turn red. But you can see the trend here. You see how this gives a live flowing trend of, so when the EMAs are in order like this, where the 9 is at the top and the 200 is at the bottom, this order right here, this shows a nice uptrend, a continuation of a nice uptrend. Whereas when you see a sell-off start coming, you'll see that the 9, the purple, I keep purple, crosses down below the 21. That could signify a sell-off. Then it crosses the 50 and the 21 crosses the 50. This also signifies a strong sell-off. You see how that is? So the first time on the daily as a swing trader, when I see these start crossing over, I would enter some shorts here. And that would lead to a massive sell-off of what looks like about 21%. So you can use these EMAs to detect that. Even an intraday, if you're a scalper, we can go all the way down to the 3M. And you can see the same price action movements when they're bullish. When they're bearish, you see they crossed back over here. So you could have entered in this this mess over here of about 205. And the 200 is at the bottom. And you could have rode it back up to, looks like 209 today. And then once they cross back over, they roll back down to 204. But you can get a good picture here of how that works. We're on a nice healthy one where you see the crossover on this gap up from 201, gap up again, all the way to 210. And that's how you could use these EMAs as live and flowing support and resistance. Now let's talk about them actually being held as support and resistance levels. All right. Actually, a good one for this is AMD on the daily. As a swing trader, I look for a lot of these. So AMD here, you could see I had marked this already. It had bounced off of the 100-day EMA on 26th of May, 2020. It had bounced again off the 100-day EMA on the 26th of June, 2020. Then we had a massive breakout. And then it tested again, the 100-day EMA right here on November 20th. And then again on the February 20th, and again on the 18th of Feb. Finally, it broke that 100-day EMA here. This is your signal that the uptrend is currently struggling and you would get rid of your positions or enter shorts. But do we see how that 100-day EMA acted as support? And then on SPY, the S&P 500, you can see how the 9 EMA and the 21 acted as major support in this current bull market that we entered back in from last March. The 200 being the most respected because when you see the bounces, when they get down to the 200, like Amazon here, Amazon, a stock like that, which is extremely bullish, you see when we hit the 200, we bounce, test again, bounce, test again, bounce. And then look at this last bounce. Amazon has gone from lows of $29.93 all the way as high as $3,300. And that's just in the last 2 weeks. So when you see stocks, good, fundamentally strong stocks bouncing off this 200-day EMA, it's definitely a buying opportunity. That's moving averages. That's why I love to use them. You can use them for the crossovers, live support and resistance. They tell you a lot more than you realize when you're talking about price action movements and really adding this tool to your technical analysis toolkit. All right, let's talk about Fibonacci retracements. Everyone's so hype on these. Everyone talks about Fibonacci retracements like they're the best fucking things in sliced bread. But I'm gonna be honest with you, I only use them in like very small occasions. I'm not a huge Fib guy. I'm gonna show you them though because some of you may like want to impress your friends or something. I don't know. The Fibonacci retracement tool is a favorite among short-term traders because it clearly identifies level of potential S&R. The reason behind how the indicator calculates these various levels of support and resistance is beyond the scope of my knowledge. I'm not going to try and break this down for you guys, the mathematics behind it. I have no clue how that shit works. Fun fact, the 61.8 Fibonacci retracement, the 61%, that can be found in like weird things in life and mathematics and space. The 61 Fibonacci always pops up mathematically all over. Sometimes if you guys have time, look it up. It's actually pretty interesting. So you could see how the Fibonacci math, it goes all the way back down to like Da Vinci's Code and shit. But take a look into that for you conspiracy theory people. You'd love that. Notice in the chart above how identified levels are acting as barriers of the short-term direction. So we can see this current uptrend. We have a nice breakout. There's no previous support and resistance level here, but there's a Fibonacci. All right, so we see it active resistance here, support here, and then resistance here, broke out, top of the uptrend, and then it fell back down. Look at the buying pressure at this one. Gap down to the next one, gap down to the next one, got bought back up, you see? And so Fibonacci's just have a very unique way, I don't know the math, of following these trends. Here's the key things about Fibonacci retracement levels. They connect any 2 points that the trader views as relevant, typically a high point, a low point. That's how you draw them out. The percentage levels provided are areas where the price could stall or reverse. So you want to check that if it's going to consolidate or it's going to continue. Talking all the damn time. I got something in my throat. I gotta get some bubble water. The most commonly used ratios include the 23.6, the 38.2, the 50%, and the 61.8 are the most common. All right, so these are your strong fibs right here. These are the ones that are most respected. Then you got the 78.6 way the hell out there. These levels should not be relied on exclusively. Remember, they're just a piece of the puzzle. They're not the entire thing, but they're just a piece of the puzzle. So it's dangerous to assume that the price will reverse after hitting a specific fib, but it's definitely something as a trader that could catch your eye for a support and resistance level. let's head on over to our charting software and let's draw out a fib. All right, so one I like to use the Fibonacci on was this downtrend. I was using the Fibonacci's on this downtrend. So you come over to the left here. It's one of these bad boys right here. So the third one down, you're going to go ahead and click on the Fibonacci retracement tool. And then if we're drawing Fibonacci's, there's two ways to do so. So on a downtrend, you want to go to the top of the downtrend and then come to the bottom here. All right, so take a look at this. Right here at the 0.5, you see how it bounced here, hit here. There's nothing there. There's not a previous number or anything. It's just Fibonacci's mathematics that shows this. Where's the 61.8? We could see highly respected throughout the 61.8, which is the most common and the highly respected all the way to the top. We could see that the 70 was used as well. And then we could see that we had some buying pressure down here at the 38, and then just a clear breakdown all the way through. So now if we're looking to uptrend, we're going to go to the bottom, and then we're going to go to the top of the current uptrend. Let me clean that up for you guys so it's easier. So here's the current uptrend. So when we're looking at this fib here on the daily, all right, you're going to see that, look, we had some resistance and a shit ton of selling pressure at the 78. The sixth to 1.8 again. Look at all this action. For days, it stood right by it. We've got selling pressure on the 5, selling pressure on the 38, and then a clean breakthrough and a bounce off the 23. That's how you're going to use these fibs to determine these next levels of resistance, of support and resistance. So if as a trader, if you're looking at this this angle here, you're going to see that it's currently just riding this uptrend, and with the uptrend line, you can continue to see where the possibilities of where it may go. And that's how we use those fibs to draw them out. Like I said, I'm not a huge fib guy. It's very simple to use, the Fibonacci tool over here on the left. If you want to delve deeper into it, I absolutely recommend it. For some trades, just like I was using, I did have it up on Costco for a long time. I had this drawn out just like this. And I was going to use those Fibonacci's levels for futuristic. I was going to chart out the 5 and the 618 for possible futuristic. Just like right here, it's hitting resistance right at the fucking 618 again. So definitely something to put into your toolkit. Don't rely on it super heavily. It's just something fun that you could use to determine support and resistance, because it is highly respected. When you're in that 685 range, I like to use is the breakouts. So if it breaks out of 5, I would probably enter shorts. If it breaks above 618, I would probably enter calls that are go long. That's how I like to use it. Wait for it to just consolidate in that 5 to 618 zone, and then you can use it from there. So let's talk about the significance of support and resistance. How do we measure the significance of support and resistance? How do we know if this support level is strong? All right, so there's like a couple key things that you're looking for here, right? You're gonna want to get your pen and paper off of this. A previous support level will sometimes become a resistance level when the price attempts to move back up. And conversely, a resistance level will become a support level as the price falls back down. Charting allows traders and investors to visually identify these areas of S&R, and they give clues regarding the significance of these price levels. More specifically, for the significance of S&R, you want to look at this. The number of times that S&R level's been touched. The more touches, the stronger the level becomes. All right, you want to look at the price action of that S&R level. A steep advanced trend may be stopped by a significant level of S&R compared to a slower approach. So what it's saying is if it's downtrending like this, and it might break through one of those levels, but a strong level, if it's downtrending like this, it's most likely going to hit and bounce like a basketball right off that strong level of support. And then you can find out that this level of support was significantly stronger than this top one here. All right, does that make sense? So that's what we're looking for. Next thing we're going to look at is the volume on those levels. The more buying and selling that has occurred at those particular price levels, the stronger the support and resistance level is likely to be. Because like we were talking about with these larger funds and securities that sell and buy at these certain levels, you may see a huge spike in volume. Those huge spike in volumes can also tell you the significance of that S&R level. So if you look at previous price data, about 12 months, if you're a swing trader, you'll see those massive spikes of volume on those key levels. And lastly, the significance of S&Rs measured by time. Support and resistance zones become more significant if the level has been tested regularly over an extended period of time. So those are the 4 things you want to look at when you see it underlying. If you're deciding, hey, should I buy this? It's at a level of support. It's been consolidating here for a day. Well, is this a strong level of S&R? Well, let's find out. Let's find out how many times it's been tested before. Let's find out the price action, how steep, how big of pressure did we fall into this S&R? What's the volume looking like at this level? And how long has this level been established? That's what we're looking for. So I hope you guys wrote all this down. Just fucking unbelievably good information right there. Unbelievably good. All right, this is the conclusion. So I started off my trading career as an S&R trader only. I strictly only played 3 stocks when I started trading options a couple of years ago. I played Square, Alibaba, Walmart, and AMD. I'm sorry, and AMD. I paid 4. I profited tens of thousands of dollars in this bull market because all I did was wait a day, 2 days, 3 days for these stocks to hit new support levels. And I would buy a serious amount of call options and swing them every time. And I profited. I didn't even know what I was really doing, but I did know support and resistance on these 4 companies like the back of my hand. If I said Square back then, if I said Square's hitting 61, I knew it was going to go back up to 67, 70. Back then, if I said Walmart's hitting 118, well, 118 was the sweet spot. We're going up. Understanding these levels of S&R can drastically improve the returns of the trading strategy that you're using because it gives you an accurate picture of what price levels should maintain in the event of a correction. So if we see another massive sell-off in the market, it's important to know where your assets will most likely stop falling because the strong level of support, buyers are going to step in no matter what right here. And you got to know those levels. Conversely, understanding a future level of resistance can be advantageous because this is a price level that could potentially harm your long position. So if you're in a long call option and you haven't marked out your resistance levels, but you don't know why the underlying assets or the stock's not going up, you probably want to chart out your S&R and maybe be smacking a fucking Fibonacci for the last week and you didn't even realize it. So go ahead and chart that out. These areas, sellers have a high willingness to sell that stock, and you might be fighting the big guys, and you never want to fight the market makers. As mentioned above, there's several different methods to choose from when you're identifying the S&R, but when you know how to identify S&R, go through it, you can run your checks, and you can knock it out quickly. The concepts remain the same for S&R throughout every one, though. The price of a stock it stops the price of a stock from moving in a certain direction, and they're crucial areas of buying and selling pressure. That's exactly what it is. And that's it. Ready to go. Now that you're familiar with some support and resistance, does anyone have any questions at all about S&R at this time? Thank you guys so much for attending day 3 of the Max Options Trading Beginner course. Can we look at Apple today? I had multiple 127 calls this morning, went down and then it bounced back. I got out. Close it. What should I have done or saw to prevent me from getting out too soon? That's a discipline and risk management question, John. That's not a support and resistance question. We will definitely talk about that, my friend, next Thursday when we go over discipline and risk management. And I promise you, when we create our trading plans together and your trading logs, we will correct that. I sold too soon. You're going to go over fear and greed and why you're doing that, my friend. Don't worry. Have no fears. Does anyone have any support and resistance questions at this time? Any at all? Thank you guys so much for attending. By the way, if you enjoyed this, please head on over to our review channel. Let me know. Let everyone know how the support and resistance class was. I love breaking it down for you guys. Any way to catch the past 2 days? Hi, Annie. Any? Yes, there is. All these videos will be available in the next couple of weeks after we finish these classes. Does anybody have any support and resistance questions at this time? Any at all? What do you need an example of, Ivan? What type of support and resistance would you like to see an example of? Just to go over a stock, looking at some of the things you've gone over, just putting it all together for S&R. Well, the first thing I would look for is how important is the 9 crossing the 21 and the 50? It's a pretty strong, Annie. It's pretty strong for looking at, like, if you're talking the 9, the crossovers, it's pretty solid way for scalpers to get in on trades. A lot of scalpers I know use the crossover, the 9 to 21 for breakouts. When you look at the 9 crossing back over the 21, so something like this down here, you could see on SPY today, the 9 crossing back over the 21, how SPY rode that 9 all the way back up to 407 almost, when it crossed the 21 right down here at 406. So a full dollar. So scalpers can use that kind of momentum to make educated decisions on what they're going to do. You can see here the price of this today fell. The 9 crossed the 21 up here at 692 on Tesla. And we could see it never crossed back up. How the EMA right here acted as a level of resistance for the rest of the day. And unfortunately, Tesla has not recovered. This was a news drop. So the 9 to 21 is pretty well respected. It's also just a great way right here, Ivan, that you could have entered a trade. You could have said, wow, Tesla gapped down. It's unable to break above the EMAs, using it as resistance. It's below the 9 and the 21 for most of the day. It's a pretty bearish indicator right here. Does anybody have any other questions regarding S&R? No, Ivan, I'm not going to do any technical analysis for you guys. This is just about S&R. If you'd like, though, you could look at my current chart. From what I've told you, you should be able to make a decision from looking at this. So far, when we go over our technical analysis class, you'll get the last one. If there's no other questions at this time, guys, do you use the same 921.50 for swinging daily? Yes, I use the same EMAs for day trades and swing trades. 921.50, 100, and 200, always. I do not change my EMAs whatsoever. This is it. You see this healthy uptrend here? Look at it, riding the 9 and the 21, tested the 50, tested the 50, tested the 50. You can see beautiful here. So that's square. That's what we're looking for, ladies and gentlemen. Everybody, thank you so much again for attending the support and resistance class. You guys have a great evening, and we'll see you tomorrow at the buzzer.